All right, family. Peace and love. Peace and love. I love to see those that are already tuned in, ready to take action on this information that I'm about to cover today. I got some great information for you guys. Let me take it out from under my laptop. And I got a couple different books for you guys. Specifically, I'm going to give you guys, um, some insight on. We're going to go over some readings today, so you guys aren't just hearing from me. I'm going to give you guys some things I want you guys to go out and read for yourself as well too. So I'm very grateful, very very excited to be here. And so if this is your guys' first time on the channel, I want you to drop in the chat box. I want you to drop new member. I downloaded Discord. What do I do next? Make sure you're in the chat. I'll drop the link for you guys. The chat should be able to upload for those that are watching the replay as well too. So if you guys are watching the replay, feel free to check the chat box. In one of the first chats, I'm dropping our public Discord within there. And in the public Discord, if you guys have any questions upon your guys' process, or if you guys are seeking guidance, please come in the Discord. And it's not just me that's going to be able to help assist you. It's going to be my mentees and other individuals within the YBC community that have been learning consumer law for the past 2 years. Like I said, what we're covering here, I'm still going back and, I'm taking you guys through, baby steps. I'm taking you guys step by step so we get the foundational groundwork. Today, I'm going to go over the creation of the banking system here in the United States of America. I'm going to, break it down and how it was created. I'm going to give you guys a book to go out and read, to go do for self. And I'm going to give you guys I'm going to break down the creation of the loan process and how in every single transaction, we are the creditor. So if you guys are ready for this information, I need y'all to drop "I am a creditor" in the chat box. I need you guys to drop "I am a creditor" in the chat box. And I need everybody to go ahead and like this video coming on in here as well too, so that we could go ahead and ascend all together, so that more people can become aware of this information. So the book that we're going to be covering on today's call, one of them at least, is The Creature from Jekyll Island. I'm actually going to be making a post right after this video as well too, and I'm going to be doing a giveaway as well too for a couple individuals, for 3 select individuals that do repost the video that I'm about to drop on this book. I got a video that I'm about to drop on my page and our business page on Instagram and over here on TikTok as well too. We just launched our TikTok channel. All social media platforms, you guys can find me at Credit Gotti. We've uploaded 1 video on the TikTok, and I'm still uploading and working with them in regards to uploading my bio and my profile pictures, giving me some difficulty. I love to see the individuals that are taking action and being coachable, dropping "I am the creditor." 100%. In fact, we all are. And so without further ado, I'm going to break down The Creature from Jekyll Island. Then we're going to get into another reading, and then I'm going to leave you guys off with another book of some treaties as well too, especially for my indigenous individuals that are on the call as well too. I got a lot of individuals that are reaching out and stating, I am also an American Indian. I am also indigenous to this land as well too. So I'm going to give you guys a couple different treaties, visions of law and peace that I'm going to break down to you guys that go back to the 16 to 1800s, when the Europeans and Spanish came and colonized our land. So I'm going to break down real quick the table of contents, a couple of things I'm going to go over, and just what this book does provide, because this is a book in which I suggest every single one of you guys go out and look into. So what is a creature? What creature is this? Is the first chapter. What is the Federal Reserve System? A lot of people don't even know what the Federal Reserve System. The answer may surprise you. It is not federal, and there are no reserves. Furthermore, the Federal Reserve banks are not even banks. The key to this riddle is to be found not at the beginning of the story, but in the middle. Since this is not a textbook, we are not confined to a chronological structure. See right here, this is the 5th edition as well, so I want to make it clear. I have yet to purchase the 1st edition, but I was just looking at it, more in depth today as well too. And as I do go through this one, I am going to circle back around and cop that first edition as well too. So I'm still going through this thick book myself, but I wanted to give this to you guys, and I've found different readings that I've specifically highlighted for you guys to go ahead and get an understanding on how we credit this whole system, tying into everything that I teach when it comes to consumer law. So what I teach within consumer law, why these laws have been passed just as a whole in the 1960s and 1970s, is because of the creation of the Federal Reserve. And I'm going to hop into it and show you guys, this whole system and the fictitious, nonsense that they have going on. So a crash course on money. We're going to read into this as well too. This is 8 chapters contained in this. In the following section, deal with material that is organized by topic, not chronology. Several of them will jump ahead of events that are not covered until later. Furthermore, the scope is such that the reader may wonder what, if any, is the connection with the Federal Reserve System. Please be patient. The importance eventually will become clear. It is the author's intent to cover concepts and principles before looking at events. Without this background, the history of the Federal Reserve is boring. With it, the story emerges as an exciting drama which profoundly affects our lives today. So let us begin this adventure with a few discoveries about the nature of money itself. Then, they got the new alchemy. The ancient alchemists sought in vain to convert lead into gold. Then we got a tale of 3 banks. We got the harvest. We got time travel into the future. And then that's really the whole grasp of it. This is a 600-page book in which I do highly advise every single one of you guys go through and read, study, and understand for self. So without further ado, let's hop into the readings. And so I wanted to read the summary really quick upon the journey to Jekyll Island. So the basic plan for the Federal Reserve System was drafted at a secret meeting held in November of 1910 at the private resort of J.P. Morgan on Jekyll Island off the coast of Georgia. So this is just off the coast of Georgia. Those who attended represented the great financial institution of Wall Street and indirectly Europe as well. The reasons for secrecy was simple. Had it been known that rival factions of the banking community had joined together, the public would have been alerted to the possibility that the bankers were plotting an agreement in restraint of trade, which of course is exactly what they were doing. What emerged was a cartel agreement with 5 objectives. Stop the growing competition from the nation's newer banks is the first one. The second one is to obtain a franchise to create money out of nothing for the purpose of lending. That's number 2. Number 3 is to get control of the reserves of all banks so that the more reckless ones would not be exposed to currency drains and bank runs. Number 4 is the taxpayers to pick up the cartel's inevitable losses and convince Congress that the purpose was to protect the public. That sounds very deceiving, right? It was realized, if y'all know, y'all know. It was realized that the bankers would have to become partners with the politicians and that the structure of the cartel would have to be a central bank. The record shows that the Fed has failed to achieve its stated objectives. That is because those were never its true goals. As a banking cartel, in terms of the 5 objectives stated above, it has been an unqualified success. And so that is the whole summary upon the first, subchapter of the journey to Jekyll Island. I highly advise all of you guys, we'd be here, for till tomorrow we'd be here till the end of the week if we read through this whole book. So the 6 men who attended the secret meeting on Jekyll Island, where the Federal Reserve System was conceived, represented an estimated 1/4 of the total wealth of the entire world. And whom here can guess any of those 6 individuals? I got something for you guys. If any of you guys can guess, any of those 6 individuals. Let me get comfortable here. All right. We're going to be here for a while, so let's get comfy. All right. Okay. And so I'll go ahead and list them off. Nelson W. Aldridge is a Republican whip in the Senate. He's a chairman of the National Monetary Commission, father-in-law to John D. Rockefeller. So this was John D. Rockefeller's father-in-law. Number 2 was Henry P. Davison, senior partner of J.P. Morgan's company. Number 3 is Piatt Andrew. This was the Assistant Secretary of the Treasury. Number 4 was Frank A. Vanderlip. He was the president of the National City Bank of New York, representing William Rockefeller. Number 5 was Benjamin Strong. He was the head of J.P. Morgan's Bankers Trust Company, later to become head of the system. And number 6 was Paul M. Warburg, a partner in Kuhn Loeb and Company, representing the Rothschilds and the Warburgs in Europe. So let me see. Okay. So the name of the game is Bailout. It was stated in the previous chapter that the Jekyll Island Group, which conceived the Federal Reserve System, actually created a national cartel which was dominated by the larger banks. It was also stated that a primary objective of that cartel was to involve the federal government as an agent for shifting the inevitable losses from the owners of those banks to taxpayers. That, of course, is one of the most controversial assertions made in this book. Yet there is little room for any other interpretation when one confronts the massive evidence of the history since the system was created. Let us therefore take another leap through time, having jumped to the year of 1910 to begin this story. Let us now return to the present era. To understand how banking losses are shifted to the taxpayers, it is first necessary to know a little bit about the scheme and how it was designed to work. There are certain procedures and formulas which must be understood, or else the entire process seems like chaos. It all it is it is as though we had been isolated all our lives on a South Sea island with no knowledge of the outside world. Imagine what it would be then like the first time we traveled to the mainland and witnessed a game of professional football. We would stare with incredulity at men dressed like aliens from another planet, throwing their bodies against each other, tossing a funny shaped object back and forth, fighting over it though it were a great value, yet occasionally kicking it out of the area as though it were worthless and despised, chasing each other, knocking each other to the ground, and then walking away to regroup another surge. So they're talking about football in here. And anybody that's not familiar with it is also going to be like you guys that are not familiar with the banking system and this whole operation that is going on. So the operation of our monetary system through the Federal Reserve has much in common with the professional football. First, there are certain plays that are repeated over and over again with only minor variations to suit the special circumstances. Second, there are definite rules which the players follow with great precision. Third, there is a clear objective to the game, which is uppermost in in the midst of the players. And fourth, if the speculators are not familiar with the objective, and if they do not understand the rules, they will never comprehend what is going on. So that's what a lot of you guys come to this channel that are new may feel as such. I don't, and I'm not able to comprehend anything that's going on. So we've got to get familiar with the rules of the game, and I'm going to go over the rules of the game real quick. So the game begins with when the Federal Reserve System allows commercial banks to create a checkbook money out of nothing. Details regarding how the incredible feat is accomplished are given in the chapters. The banks derived profit from the easy money, not by spending it, but by lending it to others and collecting interest. When such a loan is placed on the bank's books, it is shown as an asset because it is earning interest and presumably someday will be paid back. At the same time, an equal entry is made on the liability side of the ledger. That is because the newly created checkbook money now is in circulation, and most of it will end up in the other banks, which will return the canceled checks to issuing bank for payments. Individuals may also bring some of this checkbook money to the banks and request cash. When a borrower cannot repay and there are no assets which can be taken to compensate, the bank must write off that loan as a loss. All right, so these are charge-offs. So if you guys have charge-off, these are what banks are doing. They're writing it off as a loss. However, since most of the money originally was created out of nothing, right? The bank and okay. Since most of the money originally was created out of nothing and cost the bank nothing except bookkeeping overhead, there is little of tangible value that is actually lost. So the banks are actually never losing. It is primarily a bookkeeping entry. A bookkeeping loss can still be undesirable to a bank because it causes the loan to be removed from the ledger as an asset without a reduction in liabilities. The difference must come from the equity of those who own the bank. In other words, the loan asset is removed, but the money liability remains. The original checkbook money is still circulating out there, even though the borrower cannot repay, and the issuing bank still has the obligation to redeem those checks. The only way to do this and balance the books again is to draw upon the capital which is invested by the bank's stockholders or to deduct the losses from the bank's current profits. In either case, the owners of the bank lose an equal amount to the value of the defaulted loan. So to them, the loss becomes very real. If the bank is forced to write off a large amount of bad loans, the amount could exceed the entire value of the owner's equity. When that happens, the game is over and the bank is insolvent. Okay. So I'm not going to read through this all. I just wanted you guys to get a great understanding of that. I'm going to go over more of the loan process here in a little bit. I got a lot of different pages I got, for you guys. So a summary of this whole subchapter as a whole. The name of the game is Bailout. Is although national monetary events may appear mysterious and chaotic, they are governed they are governed by well-established rules which bankers and politicians rigidly follow. The central fact to understanding these events is that all money in the banking system has been created out of nothing through the process of making loans. A defaulted loan, therefore, costs the banks little of tangible value, but it shows up on the ledger as a reduction in assets without a corresponding reduction in liabilities. If the bad loans exceed the size of the assets, the bank becomes technically insolvent and must close its doors. The first rule of survival, therefore, is to avoid writing off large bad loans and, if possible, to at least continue receiving interest payments on them. To accomplish that, the endangered loans are rolled over and increased in size. This provides the borrower with money to continue paying interest plus fresh funds for new spending. The basic problem is not solved, but it is postponed for a little while and made worse. The final solution on behalf of the banking cartel is to have the federal government guarantee payment on that loan should the borrower default in the future. This is accomplished by convincing Congress that not to do so would result in a great damage to the economy and hardship for the people. From that point forward, the burden of the loan is removed from the bank's ledgers and transferred to the taxpayer. Should this effort fail and the bank be forced into insolvency, the last resort is to use the FDIC to pay off the depositors. The FDIC is not insurance because the presence of moral hazard makes the thing it supposedly protects against more likely to happen. A portion of the FDIC funds is derived from assessments against the banks. Ultimately, however, they are paid by the depositors themselves. When these funds run out, the balance is provided by the Federal Reserve System in the form of freshly created new money. This floods through the economy, causing the appearance of rising prices, but which in reality is lowering the value of the dollar. The final cost, just think about what your dollar was worth 10 years ago, 20 years ago to current day. This flood, and think about what's been taking place the past 10 years, 20 years, etc. Think about what happened in 2020 and just what the dollar has done since 2020. This flood through the economy causing the appearance of rising prices, but which in reality is the lowering of the value of the dollar. The final cost of the bailout, therefore, is passed to the public in the form of a hidden tax called inflation. So much for the rules of the games. In the next chapter, we shall look at the scorecard of the actual play itself, and that is the protectors of the public. And so I'm going to go ahead and take you guys here to an important read. We're going to skip through this chapter, and we're going to skip to the creature from Jekyll Island. So that's the name of that chapter, right? Yes. So the summary of this is money is paper money without precious metals backing, which people are required by law to accept. The first recorded appearance of fiat money was in the 13th century of China, but its use on a major scale did not occur until colonial America. Excuse me. The experience was disastrous, leading to massive inflations, unemployment, loss of property, and political unrest. During one period when the Bank of England forced the colonies to abandon their fiat money, general prosperity quickly returned. The Revolutionary War brought fiat money back to the colonies with, with a vengeance. The economic chaos that resulted led the colonial governments to impose price controls and harsh legal tender laws, neither of which was effective. Fractional money is defined as paper money with precious metals backing for part, not all, of its stated value. It was introduced in Europe when goldsmiths began to issue receipts for gold, which they did not have. Thus, only a fraction of their receipts was redeemable. Fractional money always degenerates into pure fiat money. And so this is where I believe the most important reading is of this book. And so I'm going to help you guys understand the illusion that is taking place. So we're going to break down debt, we're going to break down money, we're also going to break down the government's debt, we're going to break down security assets, Federal Reserve check, government deposits, government checks, commercial bank deposits, bank reserves, excess reserve, bank loans, more commercial bank deposits, bank fiat money, and total fiat money. So if you guys are gaining value, if this is making sense thus far, if you guys want me to continue reading, I want you guys to drop a 3 in the chat if this is making sense. If you guys are with me, flood the chat box with 3. And let's go ahead and get these likes up as well too for anybody that is just streaming in here. Let's get these likes up. This is just the first read of what we're going to dive into on today's call. We're only 22 minutes into this call, so we're just getting started. We're just getting into, the the real sauce within this live. I'm going to cover how consumer law applies to everything that is being taught within this book as well too. And I got a video for you guys that I'm going to drop on my Instagram, the business's Instagram, as well as TikTok as well too. So, stay tuned, family. So without further ado, debt. The entire function of this machine is to convert debt into money. It's just that simple. First, the Fed takes all of the government bonds, which the public does not buy, and writes a check to Congress in exchange for them. It acquires other debt obligations as well, but government bonds comprise most of its inventory. There is no money to back up this check. These fiat dollars are created on the spot for that purpose. By calling those bonds reserves, the Fed then uses them as the base of the creating 9 additional dollars for every dollar created for the bond themselves. The money created for the bonds is spent by the government, whereas the money created on top of those bonds is the source of all of the bank's loans made to the nation's businesses and individuals. The result of this process is the same as creating money on a printing press, but the illusion is based on an accounting trick rather than a printing trick. The bottom line is that Congress and the banking cartel have entered into a partnership in which the cartel has the privilege of collecting interest on money which is created out of nothing, a perpetual override on every American dollar that exists in the world. Congress, on the other hand, has access to unlimited funding without having to tell the voters their taxes are being raised through the process of inflation. If you understand this paragraph, you understand the Federal Reserve System. So that is debt right there. So now we're going to talk about money. So if that made sense, I want you guys to drop debt is an illusion in the chat box. If that made sense, I need you guys to drop debt is an illusion in the chat box, and let's get these likes up, family. We got 16 tuned into the live, but we only have 9 likes. So let's get the likes up so we can get the algorithm up, so we can get more people in tune with this information, more people in tune with the creature from Jekyll Island, and more people in tune with consumer law, so we can go out and bankrupt these corporations, bankrupt the bureaus. So if y'all are in for it, let's make it happen. Because alone I can go fast, alone you can go fast, but together we can go a lot further. Imagine, you know, tens of thousands of people coming to these corporations, hundreds of thousands of people coming to these corporations, understanding the creation of money, understanding debt, and how we're the ones whom is crediting them from the beginning. And so let's talk about money now. Now, for a more detailed view, and this is going to help you guys understand truth in lending, understand the FDCPA, which is dealing with debt collectors. So that right there should help you guys understand the FDCPA. All right, what I'm about to cover right now is going to help you guys understand truth in lending. I'm going to talk about money right now. We just talked about debt. So what I just read, rewind back to 23 minutes and listen to this, and then go look into the FDCPA, which that starts at 15 USC 1692, and correspond it with the reading. If you guys want, go get this book, and this is page 193. If you guys have the 5th edition, it's page 193. So now we're going to talk about money, which this is going to, deal and entail a little bit more with, truth in lending. You'll get my charger real quick as well too. So I'm going to look at my charger real quick while we are getting it. Let's take a quick commercial break. No commercial break, but let's send this live out to at least 3 to 5 people. Let's, when I come back, have the call doubled. Even if we all send it to one person. If we send this to one person, we got 18 on the call. We'll have over 40 people on this call, and we can easily have and should have over 40 people on this call, learning how we are the creditor and how we credit this whole system. In every consumer credit transaction, the money's always coming from us. Right? I just broke down debt, and this should help you guys with the breakdown of the FDCPA and why they passed the FDCPA, dealing with these debt collectors and them attempting to collect debt, and why they must abide by certain guidelines, why a debt collector must not state that a consumer owes any debt. These are things that are verbatim stated within the FDCPA. If we go out and read, if we go out and print this for self, and then go out and highlight it and read it, it's going to tell you guys in black and white exactly what it is that I'm stating. And that you guys can look in and find 15 USC 1692B, which is acquisition of location information. And I'm going to go ahead and stop right here, and I'm going to go get my charger. Let's send this live out to at least one person. Let's get the likes up while we're here as well too, family. And I'm going to be right back with y'all. So bear with me. Bear with me, family. I'll be back. All right, I got the block. Where's she at? I just had her. All right, 1 second. Come on. All right. Where'd my block go? We got the cord. Bro, where's my damn vlog go? All right, here we go. All right, here we go. I'm glad that everybody's getting a lot of insight. I love the feedback. I appreciate the feedback. Let's keep growing, family. Okay, so this is going to align with truth in lending. And we're going to talk about money right now. Who likes to talk about money? Let's talk about money. Now, for a more detailed view, there are three general ways let me make sure we're charging. Okay. In which the Federal Reserve creates fiat money out of debt. One is by making loans to member banks through what is called the discount window. The second is by purchasing treasury bonds and other certificates of debt through what is called the open market committee. The third is by changing the so-called reserve ratio to the member banks are required to hold. Each method is merely a different path to the same objective, taking in IOUs and converting them into spendable money. So the discount money real quick, the discount window. It is merely bankers' language for the loan window. When banks run short of money, the Federal Reserve stands ready as the banker's bank to lend it. There are many reasons for them to need loans, since they hold reserves of only about 1 or 2% of their deposits in vaults, cash, and 8 or 9% in securities. Their operating margin is extremely thin. It is common for them to experience temporary negative balances caused by unusual customer demand for cash or unusually large clusters of checks, all clearing through the other banks at the same time. What I was about to say while I was reading, I was going to say, if y'all can't tell, you don't got to be the best reader or a reader in general to get out of your comfort zone and pick up a book and read. Because I'm not the best, I'm not the fastest reader, but I guarantee you guys I've read more books and more, in terms of the information in which we're teaching than every single one of you guys on this call. So I'm not saying this to impress you, but to impress upon you. If I'm doing this reading, we all should be doing this reading as well too, family. This is where the power is going to come. Right? This is how we're going to grasp this information and be able to back what it is that we're saying, not just learning things on YouTube, not just learning things on the internet, but actually picking up a book and reading it in black and white. Okay. It is common for them to experience temporary negative balances caused by unusual customer demand for cash or unusually large clusters of checks, all clearing through other banks at the same time. Sometimes they make bad loans, and when their former assets are removed from their books, their reserves are also decreased and may in fact become negative. Finally, there is profit motive. When banks borrow from the Federal Reserve at one interest rate and lend it out at a higher rate, there is obvious advantage, but that is merely the beginning. When a bank borrows $1 from the Fed, it becomes $1 reserve. Since the banks are required to keep reserves of only about 10%, they actually can lend it to $9 for each dollar borrowed. So let's take a look at a math. Assume the bank receives $1 million from the Federal Reserve at a rate of 8%. The total annual cost, therefore, is $80,000, right? 0.08 times a million. The bank treats the loan as a cash deposit, which means it becomes the basis for manufacturing as additional $9 million to be lent to its customers. If we assume that it is lent If we assume that it lends that money at 11% interest, its gross return would be 990,000. 0.11 times 9 million, subtract from this bank's cost of 80,000 plus an appropriate share of its overhead, and we have a net return of about 900,000. In other words, the bank borrows a million and can almost double it in 1 year. That's leverage. But don't forget the source of that leverage, the manufacture of another 9 million, which is added to the nation's money supply. That's OD. So that's the discount window. Now, this is the open market operation. The most important method used by the Federal Reserve for the creation of fiat money is the purchase and sale of securities on the open market. But before jumping into this, a word of warning. Don't expect what follows to make any sense. Just be prepared to know that this is how they do it. The trick lies in the use of words and phrases which have technical meaning quite different from what they imply to the average citizen. So keep your eye on the words. They are not meant to explain but to deceive. In spite of first appearances, the process is not complicated, it's just absurd. So, family, let's get into. I don't know if we got the time to read through all of these, but I'll read through most of them. So, bank loans. Yeah, we're not. Well, look, y'all can screenshot this. If y'all can see it. 4K camera coming soon for the streams. I'm about to order a 4K camera for my laptop so you guys can be seeing a lot better quality. I just got my credit report and I see all the inquiries, medical bills, and student loans. What next? Beautiful. So I'll explain that here after our readings. So that's more than enough reading, honestly. I'll read to you guys bank loans. So, but wait a minute. How can this money be lent out when it is owned by the original depositors who are still free to write checks and spend it anytime they wish? Isn't that a double claim against the same money? The answer is that when the new loans are made, they are not made with the same money at all. They are made with brand new money created out of thin air for that purpose. The nation's money supply simply increases by 90% of the bank's deposits. Furthermore, this new money is far more interesting to the banks than old. The old money which they received from depositors requires them to pay out interest or perform services for the privilege of using it. But with the new money, the bank collect interest instead, which is not too bad considering it costs them to make, nor is that the end of the process. When the second wave of the fiat money moves into the economy, it comes right back into the banking system, just as the first wave did in the form of more commercial bank deposits. And then we read into that. Process now repeats, but with slightly smaller numbers each time around. What was a loan on Friday comes back into the bank as a deposit on Monday. The deposit then is reclassified as a reserve, and 90% of that becomes an excess reserve, which once again is available for a new loan. Thus, the 1 million of the first wave fiat money gives birth to the 900,000 in the second wave, and that gives birth to the 810,000 in the third wave. 900,000 less 10% reserves. It takes about 28 times through the revolving doors of deposits, becoming loans, becoming deposits, becoming more loans until the process plays itself out of the maximum efforts, which is bank fiat monies equals up to 9 times the national debt. The amount of fiat money created by the banking cartel is approximately 9 times the amount of the original government debt, which made the entire process possible. When the original debt itself is added to that figure, we finally move to total fiat money, which equals up to 10 times the national debt. And then we get into hidden tax, which equals up to 10 times the national debt. So let me see. I may read through this for y'all. Okay, let's read through it. So, like I said, when the original debt itself is added to that figure, we finally have total fiat money, which equals up to 10 times the national debt. The total amount of fiat money that can be created by the Federal Reserve and the commercial banks together is approximately 10 times the amount of the underlying government's debt. So if we go look up U.S. debt clock. Go look up how much we're in debt. Go look up the clock. It's going up every second, right? So I'm gonna read that again to you guys. The total amount of the fiat money that can be created by the Federal Reserve and the commercial banks together is approximately 10 times the amount of the underlying government debt. To the degree that this newly created money floods into the economy in excess of goods and services, it causes the purchasing power of all money, both old and new, to decline. Prices go up because the relative value of the money has gone down. The result is the same as if the purchasing power had been taken from us in taxes. The reality of this process, therefore, that is a hidden tax which equals up to 10 times the national debt. Without realizing it, Americans have paid over the years, in addition to their federal income taxes and excess taxes, a completely hidden tax equal to the many times the national debt. And that still is not the end of the process. Since our money supply is purely an arbitrary entity with nothing behind it except debt, its quality can go down as well as up. When people are going into deeper debt, the nation's money supply expands and prices go up. But when they pay off their debts and refuse to renew the money supply, contracts and prices tumble. That is exactly what happens in times of economic or political uncertainty. This alternation between periods of expansion and contraction of the money supply is the underlying cause of booms, busts, and depressions. So, who benefits from all of this? Certainly not the average citizen. The only beneficiaries are the scientists in Congress who enjoy the effect of unlimited revenue to perpetrate their power, and the monetary scientists within the banking cartel called the Federal Reserve System, who have been able to harness the American people without their knowing in it, to the yoke of modern feudalism. And so, family, this is, the most fraud, and I'm going to go into modern day events as well too that transpire and correlate with everything in which we're seeing in today. So if we all got our laptop up, or if we have a browser up next to us, I want everybody to look into, let me pull this up for you guys. Where's my phone? Okay, let me see. I got it here on our Discord. So this leads us here into what they were doing in the 1930s. So, under the executive order of the president issued on April 5th of 1933, all persons are required to deliver on or before May 1st of 1933 all gold coin, gold bullion, and gold certificates now owned by them to a Federal Reserve Bank branch or agency, or to any member bank of the Federal Reserve System. So, gold certificates may be identified by the world's gold certificate appearing thereon. The serial number and the treasury seal of the face of the gold certificates are printed in yellow. Be careful not to confuse gold certificates with other issues which are redeemable in gold but which are not gold certificates. Federal Reserve notes and United States notes are redeemable in gold but are not gold certificates and are not required to be surrendered. Criminal penalties for violations of executive order is a $10,000 fine or 10 years of imprisonment, or both, as provided in Section 9 of this order. So they created an executive order for the people to turn in their gold to Federal Reserve banks, branches, or agencies, or to any member of the Federal Reserve banking system. And that's because the only money that is a part of our original Constitution in the first place is gold. Gold is the only money. Anything outside of gold is credit. And so that's going to lead us now into the Emergency Banking Act of 1933, which will then lead us into Banking Act of 1933. So if we read this, I want you guys to come here to the Federal Reserve dot Federal Reserve History.org. So right here it'll say, so if you scroll down and you guys will see the Federal Reserve History.org website of the Emergency Banking Act of 1933. So the little picture and the caption upon the pictures is President Franklin D. Roosevelt on March 9th of 1933. The legislation was aimed at restoring the public confidence in the nation's financial system after a week-long bank holiday. So why I wanted to bring and put emphasis upon that is I want to take you guys now to Title 15 USC 1681, and where they talk about exactly what we just read within here. And this is restoring the public's confidence. Why is it so essential to restore the public confidence in the nation's financial system? Because without we, the people, believing in their system and continuing to keep their system flowing by putting our currency, which is our commercial energy, into this banking system, there is no current, flowing through these banks, right? A current, in terms of an actual river, is what moves the water and allows the water to flow. So how the money flows is through our commercial energy and our credit card, in which is what we're giving to them. But I'm going to take you guys here to congressional findings. This is what Congress found when they put together the FCRA. The banking system is dependent upon fair and accurate credit reporting. Right away, it lets us know the banking system is dependent upon our credit. We define what's fair and we define what's accurate. Inaccurate credit reports directly impair the efficiency of the banking system, and unfair credit reporting methods undermine. So, unfair credit reporting methods undermine the public confidence, which is essential to the continued functioning of the banking system. So, if they're reporting unfair, it's undermining the public's confidence, which is essential to the continued functioning of the banking system. So, when we see all of these financial institutions, coming and being sued by the CFPB. We see what happened just with Wells Fargo a couple months ago. They got sued for billions of dollars. A lot of these banks are getting sued for billions and millions of dollars, and all of that money in which they're being sued for by the CFPB is our remedy, in which we're supposed to be going out and collecting as well too. But there's so many credit repair companies out there and people just removing these accounts but not coming to finish the job and get and seek remedy. Although there's remedy within each subchapter in which I'm teaching you guys, and I've gone over all of the remedy sections within each subchapter through multiple videos as well too. So if you guys are not familiar with them, it's time to go through and study. It's time to get familiar with these subchapters. So not only can we get deletions, because yes, deletions are more than attainable and very simple, but now it's time to come get remedy. It's time to go through the contracts and actually look and understand the arbitration process, because without even going to court, we can actually get remedy without going into the courtrooms. We don't need to go to the courtroom to get remedy, right? So I wanted to bring your awareness to, the public's confidence, which is essential to the continued functioning of the banking system. So the whole banking system is dependent upon you guys, and to be dependent upon something means you cannot live without it. The banking system is dependent upon fair and accurate credit reporting. That right there itself can help you guys remove any account, whether it be a charge off, what if you guys, and within this, go look up, and we've dropped, and many other individuals have dropped, the Black's Law Dictionary within our public Discord. So if you guys are not in the public Discord, I highly advise you guys do get into our public Discord, and where you guys can get access to our Black's Law Dictionary, and go read what accuracy means. Go read the definition of fair. Go read the definition of, you know, mm, let's see, inaccuracies of, you know, efficiency, to depend upon something, dependent. I go read the definitions and truly understand the definition section of each word, because each word itself is a whole paragraph within itself, family. And so it's vital to be familiar with every word within each definition, within each, finding that we are reading. So Let's go ahead and continue reading the Emergency Banking Act of 1933. So, immediately after his inauguration in March of 1933, Franklin Roosevelt set out to rebuild confidence in the nation's banking system because people at the time were taking their money and putting it under their beds, and they lost faith in the banking system because they weren't able to go out and get their own money from the banking system. It's just like right now, you guys can't get, if you have $1 million in the bank, you guys are not able to go withdraw all of that $1 million at one time because they don't have it in there. They're just numbers, they're just fictitious, imaginary numbers that are on their ledger. At the time, the Great Depression was crippling the US economy. Many people were withdrawing their money from banks and keeping it at home. In response, the new president called a special sessions of Congress the day after the inauguration. So what I'd advise is you guys, the cash flow you guys are revenuing. That's why I always talk about real estate. Real estate as well too is tax free. That's why 2024 we're building within Billionaires Club the largest empire of individuals that are going out and investing into real estate because that money is one tax exempt, and now that two that money is actually in a physical asset that's going to always be increasing in revenue. People are always going to need a roof over the head, and we live in a renter's world as well too now, especially people, millions of consumers are renting more than buying right now. So that's why specifically the type of real estate we're getting into in 2024 is the type of real estate we're getting into. We're not getting into residential, we're specifically getting into multi-family apartment, you know real estate. And I am going to be taking on qualified investors, and you guys will be seeing, the launch of it. But this is for anybody, but it's not for everybody. So this action was followed a few days later, and this is why we're building the community of individuals that are able to. That's why I'm here to teach you guys. That's why I'm not holding back on any information either, because getting our consumer report in order is just the basic foundational groundwork that we need to do and get done so that we collectively can go, out and, create our own communities, go out and create housing for other individuals, go out and create, you know, opportunities for others, and we all have the ability and the power within each and every single one of us to do such. So through the process, yes, I'm going to help you guys get deletions on anything on your consumer report, but now let's go get remedy as well too for these deletions, so that with the remedy we can invest into businesses, we can invest into assets that will be bringing back cash flow. We can go out and buy gold, you know. So that's what I was going to get into next. So I'd recommend with the cash flow that you do have on hand or in the banks to go buy gold. If you guys need a broker for gold, just reach out to me in the Discord, and you guys must be money ready to acquire this, and I recommend you having minimum $10,000 to go out and purchase such. Um, but you don't need 10,000 just to start. You guys can start buying small, but specifically, if you guys are looking to reach out to me, it connects with my broker for gold. Make sure you guys do have $10,000 ready to invest into gold. And I do recommend, gold or real estate always. Those are always going to be the avenues. And I specifically recommend in the time we're in right now, real estate. Not specifically purchasing at this moment because of the market and how it inflated is right now. But very, very soon, the market is going to, take a hit, and that will be the time in where we will be investing. So that's why I'm putting you guys on notice, allowing you guys the time to get your financial reports in order, to get your finances in order as a whole, so that when the time does come, we are ready to invest and we come on the other side of this next recession that is coming. And if what you guys seen in 2020 was anything, is nothing compared to what is coming here in this year or upcoming year. So definitely stay tuned and stay ready so you don't got to get ready, family. And so I highly advise, I'll drop the link for this in the chat box for everybody to go through and read this reading as well too. And this is from the Federal Reserve right here. So I highly, highly do advise all of you guys look into that. Now, that's a great read for all of you guys to go through and read. So now we've gone over the 1933 gold confiscation, which came before the Emergency Banking Act of 1933. Then we just broke down the Emergency Banking Act of 1933 and how the banking system is dependent upon us and our credit, right? So let me read this real quick. It is inevitable that some losses may be made by the Federal Reserve banks and loans to their member banks. The country appreciates, however, that the 12 regional Federal Reserve banks are operating entirely under federal law, and recent Emergency Bank Act greatly enlarges their powers to adapt their facilities to a national emergency. Therefore, there's a definitely an obligation on the federal government to reimburse the 12 regional Federal Reserve banks for losses which they make on loans made under these emergency powers. I do not hesitate to assure you that I shall ask Congress to identify or indemnify any of the 12 Federal Reserve banks for such losses. So go through, read through all of this, and this is a great read. And so now I want to take you guys here to when was JFK assassinated? Okay. When was MLK assassinated? Okay. When was the Consumer Protection Act passed? Oh. Okay. The concept of professional regulations serving the public interest is summarized in the Consumer Bill of Rights. Excuse me. Okay. It's summarized in the Consumer Bill of Rights, which I highly advise everybody, on today's call, go look into. I'll drop something for you guys. So let me read through this first. It was summarized in the Consumer Bill of Rights, first introduced by President JFK in 1962, and he was assassinated when? In 1963. So JFK was actually for the people, and he was educating us upon, the harassment and the abuse of these financial institutions, and he was given and the people back the power in which we've always had, but just educating them upon the fraud that was taking place and whom do you think came to get him. That's why specifically even here on the YouTube, I'm gonna let you guys know, and what you guys are hearing and seeing is nothing compared to the information that you guys will be getting with our in-person events that we're going to start launching in giving December of 2023. So I'm gonna start hosting some in-person events and where I'll give you guys actual game what you guys are getting here on the YouTube, whether it's in the membership levels, whether it's in you know uh, the public is nothing compared. And this is why I also have a personal mentorship, because I can't just give everything out on the YouTube because it's public information. Like, right? As y'all know the difference, public and private. Everything in the mentorship is in the private. We're not here, streaming, to millions of people in the mentorship. It's one on one with us in the mentorship, and we're here 2 times a week. And Ramona, I wanted to give a quick and special shout out to Ramona for investing into herself, investing into the mentorship. She's been somebody that's been tuned into the information for some time now, some months, probably some years going. Probably the past 2 years, I've seen Ramona, plugged into whether it be Instagram, whether it be Discord, and she invested into herself this past weekend, and I'm excited to continue growing with you and the action she's been taking thus far. From everything that she's been assigned thus far is amazing to see, and I love to see you taking action, Ramona. So I'm excited for all the success that is coming your way, and I'm excited to build with you and grow with you, Ramona, within our personal mentorship. And she did take advantage of that $500 off of the personal mentorship, which we will be having more promos and things being ran, throughout the holiday season. But at the beginning of the year, the mentorship will go back up to its original price, and right now it is half off for only 2,500 rather than being 5,000. And you guys can see that and all of the information entailed within the website. Just go to the description and check out the website, and feel free to schedule a phone call with us to entail about the mentorship. And that's where, once again, you guys will get more insight, because I'm not looking to have nobody coming after us for this information, which we are teaching. Um, and so I do censor it a lot here on the YouTube. Um, and like I said, if y'all are really looking to get insight upon the real sauce, and the more insight, definitely make sure you guys are at the event in December. Also in November, November 28th, I am going to be, out in Arizona, Phoenix, Arizona. And so if you guys are looking to connect, I'm going to be partnering with one of my um, business partners, and he's going to be throwing a big event, and I'm going to be helping him bring my community of people to his event. And so if you guys are looking to get insight to this and connect with me in person, this is going to be my first opportunity that I'm opening up to the public and to the people, and where we can connect and build together. And so November 28th, make sure you guys are in the public Discord, and reach out if you guys are in the Phoenix area to get access to that information. And if you guys are not, in December, we will be hosting an event, whether it's going to be out here in Arizona as well too again. And then starting next year, we'll start traveling, and we'll put together a tour in where most of our people are at, so we can get more in-person stuff, and connect and just get a feel for one another's energy just as a whole. So the right to safety, to be protected against the marketing of products and services that are hazardous to health or to life. So the original four rights of the Consumer Bill of Rights is the right to safety, the right to be informed, sounds a little bit like truth in lending, a lot like truth in lending, the right to choose, and the right to be heard. Right, then expansions to its eighth rights, which was added in 1985, the right to satisfaction of basic needs, the right to redress, the right to consumer education, the right to a healthy environment. And so I bring awareness to this because everything JFK, and I want all of you guys to go look into JFK's interviews and YouTube's, and or not YouTube's, and his interviews and teachings upon this, and go find and go search for yourself. And I promise you guys will see where he was talking about this. And then I mentioned as well too another individual whom was also assassinated in 1968, which was also for the people, and it wasn't just him, talking about, you know I have a dream that one day, black folks and white folks come together. No, what he was talking about is, you know, is individuals understanding our rights as consumers, so that we're not being and continuously, especially, our people continuously being, taken advantage and living in poverty, when, in fact, we are backed full in faith by credit. And JFK was actually educating people upon consumer law, and which is why the feds also came after not only JFK but MLK as well too. And this is in 1968, when in 1968, what was also passed in 1968, the first subchapter of Title 15, which is what we cover in Truth and Lending. So let me take you guys here now to Title 15 USC 1601, which is his congressional findings, and they talked about the informed use of credit. So Congress finds, so let's see, this was passed in May 29th of 1968. January, February, March, April, May. So a month before it was passed, MLK was assassinated. A month later, Truth in Lending is passed in May. He was assassinated in April. And in May 29th of the same year, Congress passes Truth in Lending. Proverbs 20:22-26. Do not become guarantors for debts. 100%. And I'm actually going to Deuteronomy 15:1. Debt is to be released. Come on. But my fault. I think you said it before, but which one is the 25 a month? That is the mob. So if you get Christian, join the mob if you're looking to, be a part of. And the mob, that's not our mentorship, but that's just the highest level here on the YouTube. I think I saw something about $250 was confused. So the $250 down payment, that's for me and our team to work on your report on your behalf to start disputing. And that is not the mentorship, that's the personal credit blueprint. So you'll receive everything in terms of your personal credit being cleaned. Okay. So in Title 15 USC 1601, once again, the informed use of credit, Congress finds that the economic stabilization would be enhanced and that the competition among the various financial institutions and other firms engaged in the extension of consumer credit would be strengthened by the informed use of credit. The informed use of credit results from an awareness of the cost thereof by consumers. It is the purpose of this subchapter to assure a meaningful disclosure of credit terms so that the consumer will be able to compare more readily the various credit terms available to him and avoid the uninformed use of credit. So, if we're looking to avoid it, these are things that should be informed and disclosed to us prior to even our credit being ran, and to protect the consumer against inaccurate and unfair credit billing and credit card practices, which is why they came up with the credit with the Billing Error Act of 19 Title 15 USC 1666. So 15 USC 1666. So now when we come here to the definition section of credit, I want you guys to have a whole new perspective upon the definition of credit defined by Congress in 15 USC 1602 term F, which it means the right. So right away, I want to stop you guys. The right granted by a creditor. So nowhere in here does it say privilege. And to grant something, think about a grant. In order to receive a grant, there's got to be certain qualifications for this grant. So we're granting them the right, right? And this is our right. So it's not a privilege. So we cannot be denied a right, a God given right. How can we be denied our right? All right, by a creditor. Let's look into the definition of a creditor: a person who regularly extends. We're regularly extending our credit. Right, we extend them credit, we grant them the right to extend credit, right? And therefore they're then able to extend credit on our behalf, whether in connection with loans, sales, or property or services, or otherwise consumer credit, which is payable by agreement in more than four installments, or which the payment of a finance charge is or may be required. Right? We know a finance charge is or may be required and is within every consumer credit transaction. And number two, it states, is the person to whom the debt arising from the consumer credit transaction is initially payable on the face of evidence of indebtedness, or if there is no such evidence of indebtedness by agreement. I want you guys, and I've done a beautiful breakdown upon that as well too. The term creditor refers only. I just broke down that one. So the term credit means the right granted by a creditor to a debtor. They don't define the term debtor. To defer payments of debt. So we can defer payments of debt, or to incur debt, or we incur debt and we can defer its payment. So I'm gonna say it again. It means the right granted by a creditor. So we're granting them the right to a debtor. We're granting the right to a debtor to defer payments of debt, to defer a payment, or to incur debt, which we do. We incur debt, and we can defer its payments and defer its payments. And so the term credit itself within truth and lending shows you guys the power that all of us have, being the creditor in fact. And then we come here to term J, which is open end credit plan. And it states an open end consumer credit plan means a plan under which the creditor reasonably contemplates repeated transactions, which prescribes the terms of such transaction, and which provides for a finance charge. Which may computed from time to time on an outstanding unpaid balance. It provides for a finance charge. So a finance charge arises. A credit plan or open-end credit plan, which is an open-end credit plan or open-end consumer credit plan, within the meaning of the preceding sentence, is an open-end credit plan or open-end consumer credit plan even if the credit information is verified from time to time. Even if they verify, oh, this is verified, this is valid. Okay. That doesn't take away the fact that we have an open-end credit plan and them trying to, verify any debt, or in close an account. How can you close an account that's open-ended? So there is no such thing as a closed account, right? They're simply just writing it off as a loss, as we just learned. So the term adequate notice, I want you guys to get familiar with this as well too, sets forth pertinent facts clearly and conspicuously so that a person against whom is to operate could reasonably be expected to have notice and understand its meaning. Such notice may be given to a cardholder by printing the notice on any credit card or on periodic statement of account issued to the cardholder. Um, And then, well, I want you guys to read this as well too, because especially for inquiries. So inquiries, this alone will get you guys the removal and get you guys remedy within it. Because how many of you guys are benefiting from you guys having inquiries on your guys' consumer report? I don't know about y'all, but I've never seen. And right when I come to the channel is 111, a minute and 11. Because I've been looking on these browsers, a minute and 11 sec, one a minute and 11 seconds, 1 hour and 11 minutes. We've been here. 111 divine intervention. We hear from them. And so I want you guys to look up the term unauthorized use. And then this is the last thing I'm going to get into before going over the questions. We could do a quick Q&A and then we'll wrap it up, family. We've been here for an hour, so I believe this will be a great call for every single one of you guys to go through, study, get familiar with. And I'm going to give you guys the book at the end, and I'm going to make this post before it's too late on the Instagram. And we're going to do a giveaway for those that share the video, that turn on your notifications, and that comment on the video. So I need you guys to comment what you guys learned from this video today. One thing that stuck with you guys. I hope all of you guys were taking notes. If not, watch the replay and then comment what you guys learned on the video that I'm about to drop tonight. That's going to be on our Instagram as well as on our TikTok page. So make sure you guys go follow the page and all social media platforms at Credit Gotti. In my bio, you guys can find the Billionaires Club Instagram as well too, which is our brand and our label. And so the term unauthorized use means a use of a credit card by a person other than the cardholder. We know the term person is typically referring to a corporation other than the cardholder. We are the cardholder who does not have actual, implied, or apparent authority for such use, and from which the cardholder receives no benefit. How many of you guys are receiving benefit from these derogatory and these inaccurate accounts being reported on your guys' consumer report? So the term unauthorized use can help you guys, once you guys break it down to them what it means within truth and lending, help you guys with the removal of any account. And this is how powerful the definition sections are alone. I'm not going over a million different codes. I'm going over the definition section right now. I went over congressional findings of the FCRA. I went over congressional findings of truth in lending, and now the definition section of truth in lending as well too. And I showed you guys how within just those, two definitions, within this definition and the two congressional findings I covered, you guys can remove any account by knowing how to assert yourself and by understanding what's truly being said within the definitions, what's truly being said within the congressional findings. What I covered in the FCRA's congressional findings can help you guys get student loans removed, can help you guys get an eviction, a bankruptcy, anything removed on your guys' consumer report. Because the banking system is dependent upon what? You tell me. And so it's time now for a Q&A. Let's get to it, family. Who is the boss girl in YBC who runs the morning mindset calls? Yes, family. So tomorrow morning, tomorrow rising, you guys can find her at Savea Miller on all social media platforms, and she will be hosting them tomorrow as well too. So yes, that will be tomorrow. If you guys are not in the Discord, I highly advise you guys get in the Discord so you guys can get access to the link, and she will be dropping that, if not tonight, tomorrow morning. But the call is at 10 a.m. Eastern time every single Monday. So we will see you guys there. And I just got my credit card. All I see is inquiries, medical bills, and student loans. What's next? Okay, so I'm gonna do a process. I'm gonna do a step-by-step process video this week, actually tomorrow, on if you guys on how to remove any account from your consumer report. So that will help you on tomorrow's call for sure. Does anyone have the Discord link? I dropped it here in the chat, but I can drop it one more time for you. So we dropped it one more time. I just dropped it right now. This is Mad Knowledge. Ashe. I just got, okay. Does anyone have, okay. I was looking at the previous live 1 week inquiry deletion, a CFPB complaint. Do we request monetary relief in the letter from them or the law office based on our state? No law office based on your state. You're seeking monetary relief, and you guys are coming for remedy from the corporation in which is, you know, reporting this inaccurate information as a whole. Dark Angel is a new member. God, you demand my car in repo. How do I get it back? Well, I need you to find that contract first and foremost. Find the contract that you have with them. I need you to look for the truth and lending disclosure, and I need you to look for the arbitration clause. And if you can find that, and if you can draft up and find any of the paperwork in which they, were telling you we're going to come and seize your property, where they're going to come and garnish, any your property, where they, after they did take it, they put it into an auction. If you got paperwork with that, drop all of that in the Discord, and we'll be able to help you more step by step within there. When are you going to do the video on the 9/8 foreign trust? So that video I'll do here in the mob, and I'll be doing that and uploading that within the mob this week. We do got one video within there, but I'm going to be, going more in depth with it, and how to use it and whatnot. But how do I register with your class? So how to register with my mentorship, how you would go about that, Akobe, is you would go to the website in the description, and you guys can schedule a call to qualify for the mentorship. So not everybody will even receive access to the mentorship, but we will hop on a call to see if you qualify, and if you do qualify, then you will be able to receive access to the mentorship. The Lady Tech, you want to collab? Well, let's collab. Reach out to me. I'm always open to collaboration. And join the Discord and let me know you're at the Lady Tech, on YouTube, and I'll reach out to you individually. So let's see. Deuteronomy 15:1, debt is to be released. Bro, my fault. I think you said it before. Which one is the 25 a month? That is the mob. The mob is the $25 a month. That's here on the YouTube channel. Much love, family. Much love. Proverbs 22:26, do not become guarantors for debt. A grantor is the one who permits, so permit. Okay. Thanks for the knowledge, 100%, King. I appreciate you showing up. I popped in late. I don't know if you covered this, but can you tell me where it says we are the creditor? Yes, you definitely got to go watch this whole live. I got another reading for you guys actually as well too that I got, and I got a book for you guys that I'm gonna give to you guys. And this, so if you are late, the Shanti, I got something for you right now. I'm astonished, well, which I have been, but would like you to know you are appreciated. Ashe, likewise, reflection. All right, bro. So I had watched a video over cease and desist and over debt validation sent into a creditor and debt collectors. So if they send in 5 steps for debt validation, I got 30 days to dispute. If they send in debt, so if they send in the 5 steps, I don't tell you guys to request all 5 at one time. So I want you to request each one of those 5 one by one. The Lady Tech, you're in Arizona. Let's collab now. November 28th, I got something for you in public. What they send in, and then I can go after them and tell them to zero out the balance and give me the title. There's more to it, Christian. How can I pass the banks asking them for proof of income? How can I get past the banks asking for proof of income? Do you know anything about Nesara? No, I do not know anything about Nesara. I'm coming back to you, Clean. Don't worry. I want to finish these questions. I know you mentioned about hard inquiries. With soft inquiries, it just says inquiries. It doesn't say hard or soft. So, yes, whether it's hard or soft, it applies to it. National Economic Security and Recovery Act. Never heard of that one. I need the adverse action letter, please. Okay, get in the Discord, reach out to it in there. And there is a cost involved with our adverse action letters. And it's not just going to come with one, you'll get 3. So go in the Discord, drop your first and last name and an email to be invoiced, and we'll invoice you that for the templates. All right, so the last reading I want to give to you guys is how you funded your loan. All debts fall ultimately to the people and to the future generations. When banks are too big to fail, they are bailed out by the governments, imposing further debts upon the people. When governments have a debt crisis, they devise more ways to tax people. This is all that we just read as well too in The Creature on Jekyll Island. So if you guys are new, go get the book, go get the first edition, go get the 5th edition, go read. Okay, when a bank extends credit for a credit card or a mortgage, it's your credit, not theirs. Banks do not loan their customers deposits on their bank reserves. Instead, they record your credit as a bank liability on the private side of the ledger, which is hidden, and as a bank asset on the public side of the ledger, which is visible. Just like the mafia, the banks have 2 sets of books. A common misconception taught in some economical textbooks is that commercial banks functions as intermediaries, lending their customers deposits whenever the banks makes a loan. This deception has been exposed by money reformers advocating sovereign money issuance, supported by the considerable evidence and ultimately confirmed by the administrators of the Bank of England in their first quarterly bulletin of 2014. Then it says whenever a bank makes a loan, it simultaneously creates a matching deposits in the borrower's bank accounts, thereby creating new money. Because of this instant money creation process, it has been said that the banks create money out of thin air. But bank credit has value in the real economy. So where does the value come from? If the source of that value was the bank, then the bank would not need customers. Commercial banks could simply create as much credit as they wanted. And if the source of the value was somewhere else in the economy, then other than the people, then again, the bank would not need customers. Commercial banks would go straight to that source, but commercial banks do need customers in order to issue credit. So what is that the customers provide to the bank? There's only one thing that the loan manager in a commercial bank wants from a customer, and that is their signature. The customer's signature on a promissory note is what creates the credit by providing commercial energy. The bank issues the loan in exchange for the commercial valuable promissory note. The promissory note represents the commercial energy of a living man or woman, which has value, and this energy can be sold or traded. Why does your promissory note have value in the real economy? Money represents innate human credit as labor and ideas backed by nature, and such is a medium of exchange for valuable goods or services. In essence, money is energy that circulates as currency being charged and discharged. Your credit is only limited by your living energy, your knowledge, and by nature. You are born with a lifetime of credit, an open end credit plan, because you have promise and other people can have faith in your promise. Therefore, you can make a promissory note with your credit. As the originator of your credit, you are the living principal creditor. Any medium, so that'll answer your question. Any medium of exchange that allows the flow uh, of productive energy between people can function as money. There's no need for money to have an instinctive value because it is simply an energy token. Money is a community invention that enables trade between various parties without direct barter. Therefore, money is a utility, and to remain useful and stable, it should be issued and limited by the community or nation that uses it. Historically, the supply of money has been limited by using a biomedical standard in which the monetary unit is defined as equivalent to a certain amount of gold or silver. Unfortunately, whoever controls such commodity money wields extraordinary economic and political power. The corruption of the medium of exchange by commodification and by private issuance as interest bearing debt has hijacked the credit the commercial energy of the people. The international bankers have captured the state's sovereign power of money issuance, and uh, upon bankruptcy, they have installed a debt money system using a legal person trust as surety. The birth certificate is a bond issued in the name of a trust/estate, and when a living man or woman unwittingly acts in jointer to a trust resembling their lawful name, they take on their liabilities of that trust as a trustee or an accommodation party in the debt money system. The international bankers have literally become parasitical controls of the people's credit, having engineered the alleged loan contract. Banks can lend an interest as long as people and governments on behalf of the people are willing to borrow, quote unquote, borrow. I want you to find, though, in the FDCPA where it defines the term borrower. When you go into a bank for a loan, you are taking your credit in the form of your promise to pay, evidence by your signature. Okay, a living man or woman is a grantor, agent, executor, beneficiary here to the name/trust/estate. But when they surrender their power of attorney, they lose their living standing, becoming liable as a trustee/debtor, which is surety of the national's corporate debt. The bank can now access the birth certificate bond, and no one signs for the bank because it is a trust agreement and not a contract. You walk into the door as a creditor and leave out as a debtor. And so that breaks down the loan process and how we are the creditor in fact. Hi, do you have experience with NS National Credit System? I requested debt validation and it took 30 days. Balance was rent. So for debt validation, looking to 15 USC 1692 G and request 1 through 5 individually. Don't request all 5 at once. I'm joining the live. What are you reading from? A reference. This is a book called Living in the Private. And this book right here, which we just read through, is called The Creatures from Jekyll Island, which what I just read is literally already in here. And we did just read through that in here as well, too. So another book, as I mentioned, for all of my indigenous individuals here on this call, for all of you guys to go out and read. It is like $100, but it's well worth it. Is Lincoln Arms Together, American Indian Treaty Visions of Law and Peace. And this will help you guys, especially for all my people that are traveling, rather than, interfering and doing business and commerce with them, and you guys are traveling and you guys have uncontracted with the state, go read this. Go get familiar with as well too with the treaties, that have been passed since the 1600s. But above all else, family, it's time to read. It's time to study. It's time to take action. Right now is the time. There's never been a better time. I appreciate every single one of you guys for tuning in. We've been here for over an hour and a half. This is a great recording, a great live for all of you guys to go through, study, watch the replay. No, I'm not, and I don't teach how to endorse bills. What I do teach is consumer law and how to, discharge them, any debt on your consumer report. But once they're discharged, how to come get remedy as well too for them. I don't teach endorsing bills. But for those of you that are looking to do such, you guys can go to High Frequency Radio's channel and go check out, a mentor of mine, Yusuf El, and somebody that I've learned from and continue to learn from on a day-to-day basis. And so I appreciate you all. My biggest mentor, though, is books. And I don't, I pick and choose what I learn from individuals, but I read books. Right, I read. We put the I don't have the links for those books, but if you guys join the Discord, I could drop the name of them in the Discord. I'll see you all at the top, because the bottom is way too crowded, family. Peace, love, and light. Credit Gotti. Peace out.